All right, so in this video, I'm going to talk about some of the ways that beginners make mistakes. Specifically, why beginners should not bet against a trend, and really why most traders should trade with the trend and avoid trying to get too smart and trade against the trend. Specifically, I'm going to be looking at why stop orders are better to trade with than limit orders. And then also later in the video, we're going to go ahead and review today's price action, look at what some of the good trades would have been. So looking at what is a trend, it's a series of higher highs and higher lows if it's a bull trend. We can see today there's a bull trend here on the open. Bull trend lasted for about 2 hours. First bar, bull bar closing near its high, and we had a second bar that was follow through, also closing near its high. So at this point, even this early in the day, you should be thinking about, I should only be looking to buy. I should not be trying to sell with a limit order somewhere. Let me switch over to a sim. I don't want to accidentally take a live trade.
Order submitted.
So, you're looking at the market like this. There's been 3 bull bars up. Let me fix my screen here. All right, so at this point in the day, there's been 3 bull bars up. And just from this alone, you should be thinking bull trend, avoid trying to get short. And what I mean by that is what traders will do is as the market is going in one direction, they will bet that the market has gone too far or that is due for a pullback. And what they'll do is they'll place a limit order like this and
order filled.
Okay, well, I'm trying to show an example here, but
order
the
filled.
market's actually right where I was trying to show that example. But you're going to place what they'll do is they'll place a limit order above a bar like this, betting that the market is has time to reverse. And something that you need to remove from your mind is that the market is never due for a pullback. It can always go further, and many times it will go farther than you could have imagined that it would have. So 3 bars up, and the next bar, bull bar. Another bull bar. And, management gets tricky once you start selling here and the market is another bar up and another bar, and this bar is even larger. The management of this is what really you need to be advanced to be able to both emotionally handle it and then just fundamentally know how to trade it and how to manage it. You need more experience, and you need to be an advanced trader. So really for anyone watching this video, you should be avoiding trying to sell when you're getting bull bars. You should instead be trying to figure out ways to get into the trend. And the best way often is you get a bull bar closing above its midpoint, buy above that bull bar. Put your stop somewhere reasonable, maybe below the move or below that signal bar, and then go for 1 times your risk, or better, try to go for 2 times or 3 times your risk. And that will keep you from having a huge loss. You want to avoid having a loss that's going to set you back a day or a week or a month, or completely take you out of the trading game altogether. You don't want to take trades that you can lose everything on. You want to take trades that you're risking a small amount and you can gain more than what you're risking. And then you apply that winning strategy over and over, and then that's how you become a winning trader. What people will try to do is they'll look at, now we have 6 bull bars up. They'll say, we've had 6 bars up. It's probably time soon that the market's going to pull back below one of the bars. So we have this 6 bar, we have the low of that bar here. It's probably about time that it's going to pull back below it. And so they'll go ahead and they'll short somewhere during this bar. Then the next bar is even bigger. It's the largest bar in the move, and now they're short. Maybe they had shorted down here, and now they're short again. And they're saying, oh my gosh, well, this is not what I was expecting. It's not supposed to do this. And so often the market will do what you weren't expecting and what it's not supposed to do. Another bar, bull bar, little bear bar. Now the market did go below a prior bar here. So we had 6, 7, 8, 9, about 10 bars. And then finally it did go below that 10th bar. But the person that was shorting, they were shorting here, betting that it would go below a bar. So they were shorting here, trying to get a profit down here. But what ended up happening is they shorted, and then the first time it went below a bar was actually up here, way above their entry. And then even if they were still holding on, then the market is now going up even higher. So that is a common mistake that traders will make. They'll come up with some justification to bet against the trend, and then they end up taking some huge loss because they were I paused the recording for a sec. There was a police car going by. But the traders end up taking some huge loss because they were trying to bet against a trend. And I see that so much, and that's such a common mistake. And if people would just get rid of that from their trading, then immediately their numbers would be so much better. I'm not saying they'd be profitable, but I'm saying they're going to remove so much of the junk from their trading, and they're going to be so much better off. So, talking about beginners that lose money this way, it's not just going to be beginners that are losing money like that. It's going to be people that are very well capitalized. It's going to be large funds with lots of money that are making these mistakes as well. Large funds go out of business all the time, and it's because they make mistakes too. There are rules that they should follow, and they don't always follow that. They get greedy, and next thing you know, they're out of business. So imagine a beginner that was selling over here. They're also probably going to be buying here as the market's going down. So when I'm looking at this, I would rather be selling somewhere like below this bar. We can see we have the high of the day here. Then we have this double top happening. So it's a lower high double top. Then we sort of have this series of these lower high double tops and a double top here. And market tried twice to go above the moving average here, but failed. Now it's getting stuck below the moving average. We're getting these bear bars. So the bulls, they're saying, it was so strong here. This is just a pullback, and the market's probably going to go higher. So they're buying into this move as it's going down. And the market goes down a little bit more, and you see here they get some relief. The market goes up to the moving average, and they're happy that they're finally getting some relief. But the best they can do is get out break even. So if they actually bought below here, the best they can do is get out break even. And it's actually really telling that that's what's happening, because the market came back right to that price. So you had people that bought here, and then when the market's pulling back, then they are selling out of their positions. So there's what that's creating is sellers around this price, because people that bought, they got this bad follow through. They're eager to get out break even, and then they're lucky enough to get out break even here. So that's what creates sellers at this price. Those that are not lucky to get out break even, those that decided to hold on, well, they get a bear bar, then a second bear bar, and at some point they figure out that they're wrong. They shouldn't be holding long, and they end up getting out. So these two big bars here, to me, those are give up bars. Those are bulls that have bought somewhere over here for whatever reason, maybe up here or maybe over here, like we're talking about. Then they're getting out they're getting out during these two big bear bars. So anytime I see one large bar or a handful of large bars, then I look at that and I say, are those give up bars? Are those traders exiting the opposite position? And so often it's the case that it makes sense that it would be. People were buying through here. They were disappointed by this rally, and then they just end up getting out. So they take some small loss during this, and then they people that didn't get out break even here. They're basically rushing to get out as the market's going down. Still, let's imagine people were holding through this, another rally, and sure, it's a relief that they get this rally, but then look, it's still lower than this high. Now they're even farther away from their break-even point, and they're touching the moving average. Once again, a little bit of a rally, a little bit of a relief, but couldn't get above the moving average, and now it's another consecutive lower high. I would also call this double top. One test go higher and a second test. Even though it's not perfect, it's still double top. Functionally, that's what's happening. Then once again, we get a series of these big bear bars down. To me, that's the bulls exiting probably below this bear bar here. So that bear bar, then the follow through bear bar. Bulls are exiting, bears are getting short, knowing that they're exiting, and the bears are making money from it. Okay, so that's all I'm going to talk about on that topic, and I'll go ahead and finish off the review and mark a few other trades. Like we were talking about on the open, bears that were shorting it was a mistake because they were trapped and the market was going higher. In the same way, if the bears are making a mistake, then it's a good thing to be long. After a gap down like this, a test of the 200 moving average, first bar is a big bull bar, second bar, follow through bull bar closing near its high. That's a good idea to be trying to get long there. And when you see this situation where there's a gap down and then two bull bars, so often you will get this rally that goes above the moving average and above the close of yesterday. It normally doesn't continue to trend up much past that. So when I saw these two bull bars and then this little rally we were getting here, I was expecting higher prices, and I was not expecting the market. I would not have expected the market to continue way up here, like above 2,800 and further. I was expecting something more like what we got. Either were reverses here, or usually it'll be more of a trading range around this area. So when you get a gap down, two bull bars on the open like this, then it's I try to be getting long and for a swing trade. So buying here, putting your stop below that second bar or below the first bar, and either way, wherever you put your stop, you need to be trying to go for a much larger move. Like I would say, probably up here is reasonable. So 2 times from where your stop is below the first bar, 2 times your risk up here. I think that's a reasonable target. And the buying really never stopped until it got up around this area. So, if you're taking one trade like that and making almost 50 points, you don't even need to trade very large to be able to make pretty good money from that. So that second bar is a good buy, and really any of these other bars here, I think are good buys. You're getting consecutive bars, you're getting these little gaps. They're closing above their midpoint. We have a target above the close of yesterday moving average. So there's room and there's targets above, and you're getting good movement on the way up. So I think any of these are good to be buying above. That being said, 50% of the moves on the open reverse. So even though we're getting this strong move, you have to realize that there's a good chance it's going to reverse. And so where might it reverse? Well, after you get some sort of reversal pattern. So first push, second push, then third push, that's a wedge. So I would be looking to get out below this bear bar. And, it's okay to do a swing trade here. It's definitely okay to get short. It's okay to be taking it as a swing trade. I was wanting to see a second entry short over here. So a little bit of a bull bar and then another bear bar. And then I'd rather be getting short after that. But there's nothing wrong with after seeing a wedge on the open like this and trying to do a swing trade here. Nothing wrong at all. 2 times your risk would have gone out here, and it'd probably be okay to try to even go for more. I think if you only took trades like this, you'd be much better off than whatever else they're teaching on YouTube. So even though I didn't take this because I was wanting a second entry short over here, if you're only taking wedge reversals and swing trading, you're going to be much better off than 90% of the other people basically in your peer group that are starting out as traders. As the market moved down, we got another wedge. First push, second push, and third push. And I think it's okay to be trying to get long above this. You are buying below the moving average, but the context is a wedge bottom on a day that's been very bullish. So there's a good chance the market's going to try to test up to the high of the day. It didn't get there. If the market, I was considering getting long somewhere in here, and one big reason I was wanting to try to get long there is because yesterday had a similar movement. Rally on the open, deep pullback, and then basically this double bottom at the moving average. And then we got a pretty good rally after that. So I was trying to look for something similar here. Rally on the open, deep pullback, and then looking for a second leg. So because of that, I think it's reasonable to trying to find a reason to get long somewhere in here. Really, your only good chance was buying above here or here. And you never really got this double bottom here. There was no good setup to get long here. Instead, it ended up being a double top. And then leading into where we have marked as a short here. And I also think this short here, that's okay as well. Double top, bear bar closing near its low, below the moving average. That'd be okay for a scalp or for trying to go for a swing trade. I think getting short here is okay as well. But when you're, especially in the last few months, I feel like when you're kind of shorting into these lows, once the market's already dipped a little bit like it has here, and then you're trying to short into the lows like this, so often that this first signal bar like this will be, if you put your stop right above it, so often that first one will be stopped out. And then the second one works like we get here. Either selling here or here, you would have been able to get at least a scalp. And so often this first signal bar, you get stopped out of. So I think selling here, it's still okay. I think I'd rather see a second bear bar as a follow through bar. A little bit smaller of a bar, closing near its low, somewhere right here, and then shorting below that. I think that's better, shorting below a follow through bar here than trying to sell below here. But the idea is still good. You're shorting below a bear bar in a bear trend. That's going to be better than doing something like trying to buy during this. A long trade that I like that I see is buying here after the bears had tried really hard here to go down, and then tried really hard here again to go down. So, where are these bears going to be exiting? They're going to be exiting above a bull bar like this. And so the context here, everything here looks good. The only issue is it's at the end of the day, so probably can't actually take that buy. But I think ignoring the time of day, I think this looks like a reasonable buy there. So that's all I've got for today. I hope that was a important lesson, on why you should not be trying to scale in to scaling against a trend. Advanced traders do it. Funds do it. It's just much harder than people think for someone beginner or intermediate to be doing. Everyone would be better off just looking for where is the trend and trying to get in with the direction of the trend. And a sure way to lose money is trying to bet against the trend, especially if you're a beginner or intermediate. So just keep that in mind. Hope this was valuable to you guys, and we'll make another video tomorrow. See you guys.